Hey everybody, Jeff Sutherlin here with eXp Realty. I'm going to give you a power-packed August 2025 market update. Okay, everybody, here it is. It's all about rates. It's all about the great big-time interest rates. But first of all, I wanted to share with you, we actually did a little analysis, tested 6 AI chat bots and asked them if there's a recession coming across the board. We had different percentages, but around 30% chance of recession. ChatGPT, Gemini, Claude, Granite, DeepSeek, Falcon H1, all of them are basically saying that it's going to be around 20 to 35% in that range with a possible recession. Now, keep in mind, if there is a recession, the last 7 out of 8 recessions we've had in this United States, prices of homes actually went up. They did not go down. The only time we had a major market correction was during the Great Recession. And that was a bad one, 2006. But everything else, the houses actually went up. All right, now let's talk about inflation. Inflation is inching up a little bit. That got Jerome Powell's attention, and he has given some hints that he may be lowering the federal funds rate at the next meeting. Now, what that means is there's an indirect relationship between the federal funds rate and the mortgage rates. The mortgage rates actually track to the 10-year Treasury bond, but there is some indirect correlation. So there might be an opportunity to see more mortgage rate decreasing going on in the near future. We're all hoping for that. In fact, Jerome Powell is saying, and many analysts are saying, that Fed officials are likely to remain focused on upcoming job reports before committing to additional cuts. So the data is still out there. The jobs are going to be very important, and the inflation rate. Those are 2 major indicators they look at. As a general rule, interest rates and mortgages go down when bad news in the economy is prevalent. So if the jobs are down and the inflation rate goes up, there's a good chance you're going to see mortgage rate deductions. Okay, now check this out, guys. Look at the sales volume we're having over there in 2025, 67,000 homes, approximately being sold per year. That's about 5,000 to 6,000 homes per month. If you have to go all the way back into 2014 to see the kind of volume that we're running right now. It's been quite a while. It's been 10 years since we've had this low of sales in our Phoenix metro area. That's Maricopa and Pinal. And you can see a lot of those back in 2006, 2007, 8, 9. A lot of those were short sales and REOs, which are essentially bank-owned property. But we are seeing a little bit more activity in the market, which we'll get to in a minute. So a little bit lackluster demand is the point of this slide. Demand's being very stagnant but level. Okay. Now here we're looking at the mortgage rates. This was taken on August 15th. This is late August. Right now we're sitting at about 6.52. It is slowly trickling down, which is a good thing. And this will be a big factor in terms of buyers coming into the market for the remaining months of the year. Typically, remember, after November 15th, the market slows down big time, but we usually have a little bit of a surge in September and October. And you can see that right here with this slide. Accepted contracts, you can see the blue line, a little bit of a surge through the summer. And that was another correlation to some interest rate deductions. And you'll see that the market will be pretty flat till about November. And around November 15th is when it starts to drop off. And then it'll kick back up at the beginning of the year. This happens just about every single year in Phoenix. It's very seasonal. Okay. Now, important slide here, my friends. This is saying that the supply now across the entire valley is balanced. 100 designates a balanced market. Okay. Now, keep in mind, it's different for every city. If you're in Queen Creek or you're in Surprise, if you're in Santan Valley, yeah, you're going to see a lot more supply. Usually the outlying areas, Maricopa, another example, you're going to have more supply. Now, the middle dial, the market index, is actually been improving. That's the trend line. You'll see the trend's gone up 3 points. That's the overall sentiment of the market. The number, when it's going up, means that it's a seller's market. If the number's going down below 100, it's a buyer's market. Right now, across the board in Metro Phoenix, we're in a buyer's market where it's 75.6, but it's slowly inching up. And the reason it's being slow is the demand is still lethargic out there in the valley. So we have 76 for demand, lethargic demand staying flat. We have the overall market index getting a little bit better. and that's been trending higher. Supply is actually going down again, which is good. And this has been going on for a few weeks. Supply is starting to be eroded by buyers coming into the market slowly. Okay, you can see that right here with the trend line. This is our market index. Remember, about 90 to 100 is a balanced market. Anything above 100 starts to become a seller's market. We have been in a buyer's market, one of the only ones in the last 20, 25 years, like 4 of them. But you can see now it's starting to come up a tad. The market's not doing anything volatile. It's just basically starting to incrementally come up. Now you can see I mentioned there's not been that many buyer's markets since 2001. We had a big time buyer's market from 06 to about 09. We had a little bit of a blip there in 2014, 2010, and then now look at us in 2025. So we are sitting in a buyer's market. That's why many buyers are getting in right now, because they believe that if they buy now and if the rates go down, they can always refinance. Okay, now here's a good stat card right here. You can see many of the cities that were going down with red arrows now are going back up. It's correcting a little bit. Okay. So you see a lot of balanced markets. A lot of these big time markets that are in Metro Phoenix, like the inner part of the city, are at balance. And you'll notice with the buyers markets, many of those are outlying communities. You're looking at Maricopa, Buckeye, Surprise, Queen Creek. Those are in big time supply heavy markets. Still a lot of leverage for buyers in those communities. Okay. And then you have the sellers markets up at the top. Chandler's been holding strong, and Paradise Valley's been doing quite well, Cave Creek. So that's a good slide for this particular, to look at all the different cities across the valley. And another slide right here, another graphic of what's going on with the sellers market, buyer markets, and balanced markets. Okay, now this is another interesting slide. If you look last year in July, we really have not moved much. We've gone up a 0.5 percentile as far as price point for the median sales price across Metro Phoenix. That's Maricopa County and Pinal County. It's not moved that much. So right now it's kind of flatlining right now. We will see what happens. A lot of people are waiting to see if the rates go down, but a lot of buyers now are starting to jump in more and more every day. Now look at this, more expired listings. People are tapping out. If they're coming into the market thinking they're going to sell their house in a week. That's just not reality anymore. We're selling houses in more like a 1 month period or a 2 month period. So many listers are expiring their listings. They just don't have the patience for it. And we do often see a lot of expired listings in the summer. People just give up and they don't want to really move during the heat. Now look at this. Okay, foreclosures have gone up quite a bit since Q3 of 2024, 274%. Now, is this the beginning of a big problem? Possibly, but I'm not going to say it is yet. We still have a lot of stuff to get through. But yeah, it did take a blip. So the people that bought a house a couple years ago in the peak, if they lost their job, they were probably in trouble. So something to think about there. Historical foreclosures. You can see we had our big problem between like 06 and then it finally trailed off about 2014. Wow, man, that was crazy times. A lot of people were foreclosing on their houses, but now look at 2025. It's very low, but you see a little blip there at the very end of this graph. We're going to see what happens with foreclosures. Okay. Same here. This is the historical foreclosures. These are pre-foreclosures, AKA short sales. This is when people owe more on their property than what it's worth. So they go into a short sale status. They try to sell the home before it reverts back to the bank. Okay. This is called a pre-foreclosure. And you can see again, we haven't had a big problem. Back in the day we did, but we'll see what happens with this too. Days on market up again. Okay. We can see the last time we've had this kind of wait to sell a home was back in 2014. And now we're waiting 48 days on average before a house goes under contract. So that's a lot more than what people are used to. Price reductions, they're actually going down a little bit. We call them price enhancements. They're actually going down a little bit. And now they're sitting at 11,000 price enhancements, per week, a 4-week running total, actually. Very interesting data. Okay, and these are what the concessions are typically coming to. Right now, we're running about 56% of homes being sold. There is a medium cost of $10,000 when it comes to concessions being offered from the seller to the buyer. So sellers have to be prepared that buyers will typically come in and ask for those concessions, helping with closing costs, helping to pay mortgage rate down, things like that. That's pretty common. Okay. You'll see the concessions that are happening are typically around the 225,000 to the 600,000 range, your typical bell curve, and that's where most of them are happening. And there you have it. This is Jeff Sutherlin signing off with eXp Realty. I've been in the business 25 years, and I'd love to support you and your family, whether you're buying, selling, investing, making the right move for your family. I understand the data, and I'd love to be able to explain it to you so you can make the best decision for your family. Have a great day.